Last year we grew above the average growth in the market. This is last year. Our plan this year is to grow within the market, but for different reasons. We need to focus more on our liquidity and focus more on the quality of assets. The quality of assets has also helped us this year to improve our rating. S&P have improved our rating to stable because of the quality of our assets. And we would like to continue doing that in order for us to be able to hopefully improve our rating further, because that will help us in many different ways. All in all, I would say that BMI will grow either within or with the market average or slightly above. Last year the market average was about 2.5, 2.6. Okay, we grow at a higher rate. This year, I think it is estimated at around 3 in 2013. So I think we would be able to grow by about 3% or slightly higher than 3%. 2013, we are budgeting and we are planning to continue our streak of continuous profitability as we started in 2011. And also we will continue to improve the quality of our assets. We'll continue to take necessary provisions against any remaining non-performing loans, and we'll continue to make the effort to improve our performance in order also to improve our ratings. So we plan to have quarterly profits on a quarterly basis and end the year with a profit. And also, in our plan is to pay dividend this year to our shareholders after a long time. So let's hope we can achieve that. No, we are we have grown significantly last year, and we have opened two new branches in December and in January this year. We are continuously reviewing our ATM network. We are continuously reviewing new initiatives and new strategic alliances. So the growth will always be there, but I think it will be more of carefully selected growth, and in which areas and in which fronts. The focus this year will be to continue improving the quality of assets, because when we came here as new management in 2010, the quality of assets was very bad. And this has been one of the main headache in turning this bank around. Today, our quality of assets, the book of assets we have, is much, much better than it was in 2010. And we don't want to lose that. We want to continue building a good quality of assets. With the good quality of assets will come revenue and will come profits. Because if you go very aggressively in the market, you believe me, you will end up with the wrong quality of assets. So we'll continue to grow, we'll continue to make money, and we'll continue to focus on both sides of the balance sheet. But it will be more focused approach on both sides of the balance sheet now. In the past, for example, I'll give you an example. In the past, we had a policy of, we call it open market policy, lending on consumer products. An open market policy is that everybody qualifies for a consumer loan, whether it's auto, personal, mortgage, credit card, or what have you. Today, we have targeted clients and we have approved list clients. So if you don't fall within those two circles, then you are an exception. And exception means it has to be escalated to the next level. And on exception, honestly, the only person who can approve certain financing like that is me as the CEO. So we have narrowed the assets that we are willing to take on our balance sheet to certain segment of the economy and the market that we feel comfortable with. We are not into the mass anymore. This is what we used to do in the past, and that's how we lost our shirt. Today we are very selective, we are very focused. You mentioned the example of NBB. NPB receives fund that they don't even want. So it's very easy for them to be conservative and to make money and to choose the assets that they want. Whereas we have to work much harder on obtaining the same quality of assets that somebody like NBB will obtain. There is a difference between the two business models. Strategy is to continue providing our customer and the marketplace with innovative products that hopefully will increase the number of customers that we have and will increase the exposure of the brand in the marketplace. Some of these products and initiatives are in-house product initiative. Some of them are through strategic alliances with other institutions, whether in the local market or outside Bahrain. And some of them are white labeling. We take a product of someone, we bring it here under a white label agreement to present it to the local market. And I think we are rolling out a number of them. I cannot disclose them now because we signed a number of them. But you will see over the next few weeks a number of products that will be launched by BMI just to enhance the bouquet of services and products that we are offering to our customer and to the market, to the local market. I'm a customer of banks. I've been a customer of banks since 78, 79. As a customer, even before coming here, I would only switch for service. I would not switch for a price. It's very easy, and the person you or the customer that you gain on a price, you will lose him on a price. But the customer you gain on services, it's not easy to lose him on services. So I think, in my opinion, my own personal opinion, services I think comes on the top of the list of how to maintain your customers. Being close to them, addressing their needs, and being there at any time that they need you for. I think that's the main thing. I'll give you an example, and this example was repeated 3 times in my career by us. We have replaced 80%, if not 90%, of the senior management of this bank. We have not put one single ad in the newspaper, and we have not used any headhunters. Because as you said, Bahrain is very small. You know the pool of talent, and you know the quality of people that you want to recruit and the competencies, and you go after them. But you have to sell them a story. You have to tell them a good story that they believe in and that you don't mislead them with. So when they come here, they can actually see the story. So yes, we have limited pool of competent people and well-trained people. But I think if they believe in the story, I think they would come and join. And I think we have been fortunate to have been able to attract a good young management team to BMI. In addition to that, you do have good people within the bank, but that were lacking leadership and lacking clarity of leadership. Today, you have a young pool or a pool of young people that are waiting to be led, waiting to be trained, waiting to be seen, or waiting to see the story with you. And this is also what we are doing. We are not interested, to be honest with you, in C players, either A's or B's. And this is how this bank will be driven. This is how this bank has been driven over the last 2.5 years, or almost 3 years. I'll summarize it in something that I practiced all my life in my career. This is not a place of work. This is a place of where you enjoy what you are doing. And if you don't enjoy what you are doing, it's not a place for you. So you have to like waking up in the morning and coming to the office. You don't have to wake up in the morning and coming to the office. That's our philosophy, and that's what we are working on. We start work at 7:30 every day. come here at 7 o'clock and tell me how many people you see in the office. Nobody is telling them to come at 7 o'clock. And this is the difference. You have to love and enjoy what you are doing. And if you have that, you'll give it 120% rather than 90%.